Hey, what's up guys, John here. Something's changing in America. I think everyone can feel this. You look out at Elon Musk, Mark Zuckerberg, Jeff Bezos. You start to look at a lot of very prominent CEOs. What are they all doing? They're getting very close to Trump. In fact, even Ray Dalio, the CEO, former CEO of Bridgewater Associates in 2013, he had the most prominent hedge fund in the world. Now 125 billion in assets under management. Well, he came out with a book recently called Changing World Order, but then he followed one up after Trump won, 4.9 million views on Twitter, saying what's coming to changing domestic and world orders under the Trump administration. Now, when you look at these CEOs, these tech CEOs getting close to Trump, and you start to look at what BlackRock and Blackstone, even Floyd Mayweather, who likely gets financial guidance and advice from very prominent and intelligent people with great information, what he's doing, he just bought 1,000 units in New York City for $402,000 a unit, $402 million purchase price. What he's doing, all of these things together align perfectly with what Ray Dalio says happens next in America. In this video, I'll break it down and give you the facts. Please hit the like button. When you do, YouTube will share the content, educate more people about what's going on. It's somewhat of a long article, so I'm not going to read the whole thing. I'm just going to break down some very, very key points that we can talk about. So he first says essentially that they're going to remove this state right here, right? They're going to bring in Elon and Vivek and Matt, and they're essentially JFK. They're going to bring in all of this change that's going to unfold. In fact, he goes one step further and says, and he references the Gordon Gekko from Wall Street, original Wall Street, where he says, greed is good.
The point is, ladies and gentlemen, that greed, for lack of a better word, is good.
And greed is good speech. What this essentially means, and in the movie, what he was doing was he was getting behind the owners of the company, shareholders of the company, and saying, look, we need to cut the fat. We need to get rid of what's making this company okay and make it great by investing in our people, investing in our business, and making things better for everyone that does business with us and everyone a part of the company, right? And so he had this conversation about how greed is good. And, and I agree in America, like greed is good if it is about really cutting away at a lot of the problems that we have. America has a lot of problems right now. So he goes one step further though, and he says that these policies may well be, and he goes on saying that, we're going to really just disrupt a lot of the problems that we've once had, and saying that, these policies may well be great for Wall Street and some tech and most businesses that are plagued by regulations and worried about increased taxes. While these entities have been previously restrained in many ways from doing deals, they'll be much freer from government constraints. These changes will be great for financial deal makers, banks, and asset managers because they'll have more freedom and more money and credit because capital controls will be eased and the Fed will be pressured to make money easier. Now, if you are a CEO or an executive or a millionaire or someone that has a couple $100,000 and that let's just say there's going to be more money in the system, right? Because it's going to be a lot easier to pay off our debt if they're going to print a lot more of it, right? And they devalue the debt itself. And so would you hold on to your cash or would you invest it? You'd invest it. You'd want to grow the money because it's probably going to die at 10% or more per year. So you're going to want to continue to invest that money. When you have $6 trillion in money market, accounts just sitting there, when you have, they're projecting that family offices are going to grow 75% by 2030, a 75% increase. And they're going to potentially surpass hedge funds with $5.4 trillion in assets by 2030. You start to look at that, you're like, all right, well, they're going to go out there and they're going to invest. They're going to put their money to work. Now, if you're somebody that, let's say, doesn't have any money and you have a lot of debt and you don't know what to do, well, you have internet connection. There's a lot of opportunity. If you spend an hour a night for a month or two, you'll realize you've learned a new skill they're able to sell online. Maybe it's SEO, maybe it's Shopify or TikTok Shop or whatever it may be. If you have internet connection, there's no excuses. You can learn anything that you really set your mind to. But you start to kind of follow this trend, you'll realize that the rich are going to get a hell of a lot richer. Like, for example, I was in New York City just a couple days ago, and my hotel was near the Flatiron Building, and I walked by this building, beautiful property. I walked by this building, and I'm like, how many units is this? Because they're converting it to residential. How many units is it? Well, it's 60 units. That's it. Only 60 units. They paid 150, 160 million bucks, somewhere in that range. Well, they just took out a loan for $357 million. So this is last month, right? So $357 million loan on 60 units. Now just do the math on that. That means that each unit, excluding any other debt, excluding the purchase price, any other loans that they have, or any other money that they put in the deal themselves, it's $5,950,000 per unit. So $6 million per unit with 60 units. So they're probably thinking they're going to sell each unit for $8, $9, $10 million a unit, right? Everyone's kind of getting ready for this big push to serve the rich. Imagine being seriously injured and missing out on millions in compensation just because you didn't know where to turn. Many law firms settle for low-ball offers, leaving victims with far less than they deserve. It's frustrating, unfair, and sometimes they even charge you before they win. That's where Morgan & Morgan comes in. America's largest injury law firm fights to get the clients the compensation they deserve. And the best part, you pay nothing unless they win. They've won $12 million in Florida, 34 times more than the insurance offer, and $26 million in Philadelphia, 40 times more than the insurance offer. Prior results do not guarantee a similar outcome. Features no upfront fees unless you win. Over 1,000 attorneys and a dedicated legal team to fight for you. They handle everything for you, and it's incredibly easy to start your claim. Your injury could be worth millions. You can visit the link in the description box below this video to start your claim today. Blackstone, they just paid $15 million after rent overcharges. You start to think about it like this too. A lot of these hedge funds, they're going to start acquiring tons and tons and tons of deals. I believe in rent-regulated areas like Los Angeles and San Francisco and New York City, buying these rent-regulated deals where there's rent control and finding ways to increase rents and to take on some of that upside.
Give me rent.
You'll get your rent when you fix this damn door!
Give me rent.
Right now, there's a lot of opportunity to get into multifamily because of the amount of distress that's happening. And in a really attractive area like LA, San Fran, or New York City with rent regulation, you have a lot of tenants inside of these buildings that they're struggling financially. They'd be more open to the idea of getting a buyout. Well, what is a buyout? Well, a buyout might be where a landlord steps in and says, look, I'll give you 15,000 bucks to move, 10,000 bucks to move, $5,000 to move. And the tenant themselves, they're financially struggling. They'll say, look, I'll take that $5,000, I'll take the 10 grand. Well, then the new buyer will step in and increase rents, depending on the area and depending on those laws. A lot of times they'll just bypass the laws, they'll just do whatever they have to do. For example, this Blackstone situation with $15 million fine. And they will increase the income on the building, thus increasing the value of the asset. And so when you have many private equity firms looking at this major opportunity, $2.7 trillion in commercial real estate debt that has to get refinanced from now until 2027. $20 trillion is the entire market of commercial real estate in America. So it's 10% if every single building had a loan, right? Not every building has a loan. So you start to think about how much of a tidal wave of opportunity is going to be coming for these hedge funds. Now, you start to kind of look at even tech CEOs are saying, for example, family office, this one right here, he just snapped up San Francisco apartments and he's buying the debt. He's buying the debt to position himself to take over the apartment complex. The last few years, 2021, 2022, interest rates are pretty low. And when interest rates are low, investors could borrow more money and there was a higher valuation on these properties. So they're heavily leveraged. They're gonna have to refinance at 6 or 7% interest rate. Insurance has skyrocketed and there's a lot more inventory, 50-year high in apartment construction. What is this all gonna mean? Rents are gonna soften, the cost to service the debt's gonna get more expensive at a time in which they're gonna have to refinance. Well, these hedge funds are looking at this saying, hey, look, we'll buy the distressed debt, the distressed multifamily loans. And so let's say it's a $50 million deal and they did a 70% loan to value, roughly a 70% loan to value, and they put $15 million down. The investor put $15 million down. They took a $35 million loan from Chase Bank, and Chase Bank saying, look, we're not getting paid. We haven't gotten paid. We realize the building's not worth 50. We think it's worth 30. And the private equity firm steps in saying, look, I think that maybe it's worth 22, 21. And Chase says, look, all right, fine, we'll cut our losses. And they'll buy it for 21. They'll put 30% down, right? So they'll put $7 million down, and they'll buy this former $50 million asset for a fraction of the cost, right? But then where things get even more interesting is if they buy it in an area where a lot of investors were, heavily active the last couple of years, and they buy it at a much lower entry price, they could in fact reduce rents and put more pressure on the existing competition to put them into financial hardship, and then acquire those deals and to begin to expand their moat. And once they have market share, they can continue to increase rents. Now, I think that's going to be a very, very strategic approach that some hedge funds and some private equity firms will be taking over the next couple of years, finding ways in which they can, exploit and monetize the current situation. Now, I think that when you have Floyd Mayweather doing these mega deals, he's not just doing this because he wants to do it. He realizes that it's going to pay to own land. It's going to pay to own assets in the coming couple of years as we begin to print tons of money. Now, it doesn't, in my opinion, it doesn't matter who would have won. There's going to be a lot of money printing. There's going to be a ton of it because you start to look at our debt and the income coming in. There's just no way they're going to have to print our way out of this problem, right? And so it's going to be bad for those that don't own assets. It's going to be bad for those that are paycheck to paycheck. But it's going to be great for those that are looking at the writing on the wall right now saying, look, now's the time to make moves. Like if you have nothing right now, you have zero, and you're hustling an hour, 2 hours a night, maybe after work, learning a new skill, you'll be able to put that, into a money-making machine probably in 90 days or 6 months. And before you know it, that thing might be able to put yourself in a position to own a house, 2 houses, 3 houses. And if we're walking into an inflationary environment, it could be a life changer for yourself and your family. It says these policies will be great for pro-Trump tech companies. And interestingly, with Zuckerberg having dinner with Trump, and you look at Bezos all getting close, it's obvious. These policies will be good for lawyers who will be busy too. I'm already seeing big changes in these people's plans to do much more under the Trump administration than they could have done under a Democratic government. And AI won't be regulated, and tariffs will be used to simultaneously raise tax money and protect domestic producers. If the Fed continues in its path to cut interest rates, which I don't think they should do, they will also shift a lot of cash that is saved in money market funds and other deposits into other markets, which will stimulate the markets and the economy. Also, the realization that the United States is in an economic war, a geopolitical war, and could find itself in a military war. He goes on to talk about, military conflict, but look, we've been hearing about this for years and years and years, nonstop fear-mongering about it. I don't think we should be basing that as something that could happen. If it does happen, then it happens. But we're walking into a major wealth building opportunity here, a major shift and a major rug pull on America's middle class. This is going to be, he really dives into basically at the end saying that he thinks the government's going to be stepping in, maybe 4 years from now, stepping in saying, look, we need to regulate all of this because there's people that need help, and they're basically going to be stepping in and restructuring the entire economy. This is what he's saying, what he's predicting. Now, I'll leave the link, or you can basically just go to his Twitter, Ray Dalio, and you can read the entire article. I'm not going to read the entire thing for you. But what do you think about this entire situation? Where do you see America going in the next couple of years? I think money is easily available to be made because they just print it out of thin air. It almost has no value anymore. Everything is $50, $100, like everything. You can't leave your house without spending $100. That was not the case 3 years ago, 4 years ago. But I'm telling you, in the future, in the near future, next year, 2 years, 3 years, it's going to be impossible to leave your house for sub $150, sub $200. Like it's just going to get more and more and more expensive. Owning assets that produce income, you're going to thank yourself for owning them. if you have responsible debt or no debt on them? Let's have a conversation below. Please hit the like button. YouTube will share the content, educate with people what's going on in America. And for more information on today's video sponsor, you can find the link in the description. Catch you next video.